Good morning, traders and investors. Roger Scott here. Now, today is Monday, August 7th. It's about 7:51. The market's going to open up in about an hour and 39 minutes, if you want me to be specific with you. It is a little early. It's only about 7:51 in the morning here. Market's not going to gear up to open for a while. I hope everyone had a great weekend. I've been doing a lot of market research this weekend. I had a working weekend, but it was so much fun. I'm very energized. I'm always energized, right? Now, folks, before we get into the video, and I like to go deep, make sure to like the YouTube channel that you see this video on, like this video, or give it a thumbs up, subscribe to the channel, subscribe to my Telegram channel. That's rogerscott.com/Telegram. And most importantly, I've opened up my VIP room for the summer, Monday through Wednesday at noon. You can come in there in about 4 hours or so and pick my brain. Don't miss out. The link is above and below this video. I give red meat. I give options. I give pullback trades. I give real trades. We go deep in that hour. So don't miss out. Let's get into today's session. So as you can see here, the Nasdaq's up about 60 points. The Dow's up about 50 points. This is randomness. This is nothing to get too excited about. Now, to give you some perspective and some broader picture, here's what we're dealing with this week, or here's what the market's dealing with this week. You've got the CPI and the PPI. These are the two big reports this week because they're happening Thursday and Friday, and you've got earnings still coming on strong. I think we're about 70% done for the big stocks, for the S&P 500, not the broad market, because you still have a lot of small caps. Banking stock, regional banks. But the point is, earnings are coming out okay. They're not that bad. We're not seeing anything crazy. There's nothing really rocking and rolling. But again, CPI and PPI are going to be very instrumental in shaping what the Fed is going to do. That's the first thing we have to pay attention to. There's nothing really major today. Tomorrow, you've got international trades and goods and services. Basically, earnings is what's going to be driving the market the next couple of days, just as it's been the last few days. Not Fed data, but earnings. Now, in terms of earnings, we're not done yet, folks. Just when you thought it was over, they pull you back in, right? You've got, not huge stocks. You don't have the Amazons and the Apples. Those are done. But, you still got a lot of stuff going on. Palantir is coming out today. I don't know if it's before or after the market closes. You got Beyond Meat. You've got Freshpet, medium cap stocks. This is good. You got Lucid. You got Paramount. I'm curious to see how Paramount does. You got One Elk. That's a big stock. We trade Tyson Foods. So there's still a lot of stocks. Tomorrow you've got UPS, ADT, AMC, mid-caps. Notice mid-caps, Celsius Water, Blink Charging, mid-cap, Datadog, and some big stocks like Fox, like Fleet. But the big ones, the large, the S&P 500 ones are starting to go by the wayside. They're almost done. Wednesday, you've got Disney. They still popping up here and there, but you can see here, Jack in the Box. I'm going to post this for you in the VIP room and expect this in my Telegram channel. So another good reason to subscribe to my Telegram channel. You get goodies like this. And here's the expected EPS. Taboola, but you can see here, Wint's coming out. So there's still some big ones sprinkled in, but for the most part, you could see there the Microsofts, the Google, still got Ralph Lauren. I could still find some big ones, but it pretty much ends on Friday. But this is great because it'll give us an opportunity to trade stocks that we haven't been able to trade, because the last 2 weeks, every time I pick a stock, Roger, you got earnings. Roger, you got earnings. There's always earnings going on. So again, we got to be really cautious in light of the earnings this week and in light of CPI. This is probably the biggest report for the Fed to determine what they're going to do, and CPI is expected to be softer again, which means what they're doing to calm inflation is working, but it's working slowly. Now that's the fundamental pictures. The tech, and we got consumer sentiment, but I don't think consumer sentiment's going to have much of an impact after the PPI, honestly. I wish they put this report right here. Why can't they put it on Monday or Tuesday to give us something to work with till those reports come out? Now, in terms of the market, the bond market is still coming down. Now, I know it reversed yesterday, or Thursday, excuse me, not yesterday. I don't count weekends. I just say yesterday, or I count weekdays. I count calendar day, basically Monday through Friday days. So if I say yesterday, that means Friday. If I say Tuesday, basically I just ignore weekends. That's pretty much what I do in my life, ignore weekends. So it seems like we're a little oversold. I think we're going to huff and puff here, but we may come down. We didn't come down all the way to our levels here. Let me just kind of go here. you could see here, we still have a while to go, but it looks like we filled this gap, which is good. So let me just put a little bar here. We may actually be at the bottom of the level. We'll see that by the end of this week, we will know. If the bonds start moving higher, that means there's less pressure on the stock market. But this is nastiness right here. And this is telling us that we are still in an inflationary pressure, especially after that company Fitch or Finch, whatever they're called, raised the alarm on the bond market, all right, lowering our rate. So be careful with the bond market. We should see a really good rally in the next few days. If we don't, it's over. And I don't think we're going to see one. I think we're going to come down all the way to the bottom. And maybe even break it. But again, let's see what's going to happen there. The other big problem, and this is really bothering me, is, and I hate to say I told you so, but I did. Look at the S&P. We're clearly coming off of those levels. Showed you this. And here's, let me make this red. And that's the next level down. And there's no catalyst right now. These earnings right here, they're not Microsoft. Disney's not going to drive the market higher. I mean, as far as the catalyst for the S&P, we're done. Fed data maybe, Fed data possibly, but not earnings. Earnings are done as far as the S&P. As a matter of fact, most of the earnings in the S&P are done. So I think we're going to see more downside. What about the Nasdaq? Not so good either. Also, right in that level. Right at that level. And I mean, folks, we went from 260 to 380. Do you really think we're going to continue moving? I mean, look at the momentum levels on the Nasdaq 100. Let's just give you some idea. 55, 70, 74% over 200 day. It's a little much. It's a little much. Let me see here. Here, let me go to 5 years. Look at where we're at right now. This is a very, very up. This is 200 day. Look at where we're at right now in an uncertain market. And look at technology. Technology's breaking. Now, consumer discretionary isn't doing as bad because of Amazon. And I mean that because of Amazon. Look. It's coming up, but that's Amazon. I mean, all right, what's next for Amazon? Is Amazon going to continue going higher and everything else going to go down? So I'm very concerned right now that consumer discretionary, that chip stocks are going to break this level and right here, and are going to do very much what the Dow is doing, which is coming down to this level, and what the S&P is doing, which is coming down to this level. So I would be very, 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 very cautious now. Let's talk a little bit about the news, see what they can add to our plight, and we'll move on with some technical momentum levels on ETFs, all right? And I'll give you some small cap stocks, 2 small cap stocks, one that's up like crazy this morning and one that's down like crazy. So participants are looking at U.S. inflation data and more corporate earnings, although corporate earnings are now taking a backseat because the big ones are already out. Dow notched a 2-week low. Apple plunged 4%. Cybersecurity stocks tumbled. Amazon, consumer discretionary. Keep an eye on consumer discretionary because aside from Amazon, I'm just not seeing any love. U.S. Labor Department showed U.S. economy only added 187,000 jobs. That's lower than expected. That's putting pressure on the Fed to ease off the brake pedal. Now look at this. This is pretty ballsy. Bostic stated that employment gains are decelerating in an orderly manner, and he believes there's no necessity to increase interest rates further to bring inflation down. I'm going to remind, I have a memory of an elephant. I'm going to remind him of this, or you guys of this, in a couple of months. But honestly, the best thing right now is sit and wait and not do anything, because a lot of the things that they do take time to come down. Fed Goolsbee said, need for policymakers to exercise patience during disinflation process. We're not in a disinflation period, folks. Hoping the central banks can achieve its 2% inflation target without triggering a recession. Possible, but we may have to do some more magic. At the same time, Michelle Bowman stated on Saturday that the U.S. central banks might need to increase rates further to completely restore price stability. I'm with her on this. There's currently an 85% probability that the Fed will not take any action. If the Fed does take action, or if this starts going to 60 or 50%, that's going to put more pressure on the bond market. This week, you've got Lilly, UPS, Disney. I mean, you don't have the big S&P 500 like the top 7, but you still have maybe 10, 15% left. Not a lot. Gives us opportunity to find trades, but again, there's still earnings. We're not done yet. You've got a lot of data this week, like consumer sentiment, but honestly, the only reports that matter are going to be PPI and CPI, and the core ones too, and the jobless data. Europe, mixed data, mixed job report on Federal Reserve policy. While they're looking at our mixed U.S. job reports and the Federal Reserve future policy decision while anticipating data from China. I guess that's what we're doing here too. China, closed lower as investors expressed concerns about the absence of significant stimulus measures and raising worries that deflationary pressure could continue to weaken the economy, which it will. The Nikkei closed higher today as upbeat corporate earnings results and stabling domestic bond yield outweighed the headwinds caused by a decline in Wall Street. That's great. I'm expecting them to continue raising rates. You've got a lot of earnings today. I've already showed you the earnings, and I'm going to email this to you. But you could see here, we're starting out hot. Palantir, PLTR is coming out, Beyond Meat, Chegg, Cabot, Freshpet. I mean, not huge stocks, but, you still have some. OneOk is coming out. Paramount, I want to know how they did. Tyson's coming out tomorrow, UPS, so you still have a lot of earnings. Keep your eye on the bond market. If this thing continues breaking, if it breaks the 94.50 level, oh boy, more pressure on tech stocks. And again, I'm not really happy with what I'm seeing here in terms of momentum. I'm not really happy with what I'm seeing here in the S&P. This breakdown, which I warned you about, by the way, don't say I didn't. Just look at the beginning of last week's video. I think we're going to come down. And the QQQ isn't looking all that great either. Let me look at NVIDIA real quick. I want to see how chip stocks are doing. See, I think NVIDIA is going to break this level right here, and it's going to put some pressure on chip stocks. I think we're getting very close to there because there's just not much of a catalyst there. Now, folks, let me just give you some where are we here? Sector watch. So the cumulative, this is over 6 weeks, 3 weeks, and 1 week. Over the last week, energy, financial, small caps. Over the last average. This is the average. And mid caps and the Dow and basic material. Notice communication, consumer discretionary, tech is down here. Over the last 6 weeks, energy, financial, small cap, mid caps. Over the last 3 weeks, energy, financial, small caps, blue chips, and healthcare and consumer staples. I like that. I like this right here. Let's look at over the last week. Energy, consumer discretionary. That's because of Amazon. Financial, Dow, small caps, mid caps, industrial, consumer staples. Here's how I would play this. I would play the 3 weeks. I would. I like the 3 week because I think that's really showing us that doesn't take that Amazon earnings into account, because one consumer discretionary stock, and it's really a tech stock, showing earnings isn't all that great. So energy, financial, blue chips, small caps, healthcare, consumer staples. And I would also keep an eye on the Russell 2000. But I like consumer staples here. I like healthcare, especially if the S&P and the Dow cool off. Because remember, when the S&P was moving up, what happened to healthcare and consumer staples? Nothing. They weren't moving. So when the Dow moves down, when the S&P moves down, when the Nasdaq moves down, you'll see consumer staples, healthcare, financial, and energy rally, which are blue chip stocks, which is why the Dow's going up. So I would just remove the Russell from here. But I do like energy, I do like financial, I do like healthcare, and I do like consumer staples. I like more of the blue chip stocks right now. Now, lastly, day trading stock up to the upside today, Miss Fresh. They're up only 57%. They were already a runner. We may have a nice little reversal. These are small cap day trading stocks. And to the short side, Sage. Look at this. The stock is down 49%. These are great day trading stocks. If you're into day trading, these are the big movers. Now, before I let you guys go, and remember, like and subscribe to our YouTube channel, our Wealth Press channel, and our Telegram channel. They may be changing the name Wealth Press, so it may be Trading Pub. Now, folks, I think I've given you quite a bit of data, but I'm not done yet. Jack Carter, former market maker, he's one heck of a trader he's been at it for decades, even longer than me, and I've been at it for almost 30 years. After 37 years, Jack's finally changed his tune about hunting what he calls monster trades, and it's all thanks to one audit. Yes, his team conducted a study That's right, listen to this, of officially published trade alerts and then overlaid the results with some historic options data? Man, oh man, the study showed that after 12 trades over 3 months, the total return could have been, this is just a study, right? 899% could have been. Hypothetical, right? No, it's not some get rich scheme. That Jack doesn't play that game. No monkey business with Jack. But it does target exceptionally big, explosive moves. Look at my eyes. Explosive moves, like these kind of moves, right? In fact, his next trade is targeting 200%. And he's going to go over all of the details today, exactly how he plans to do it at 1 p.m. Eastern Time. And guess what? I'm going to join him. Yay! Now, I can't wait to see these monster trades. Click on the link below and join us at 1 p.m. Eastern Time to see along with me. Follow the link below or above this video. It's there. Join me for my VIP room. We'll go together to talk to Jack afterwards at 1. VIP rooms at noon. You could find the link above or below this video. I'm going to be giving you some hot trades. Bye, guys. Have a great week. Put comments below this video. And keep in mind, Sage, S-A-G-E, and MF, they could be moving. Bye, guys.